Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Now the video to start the week off here on a Monday on the 11th of July in 2022. Let's pick up right there. This week will be an interesting one because we'll jump over here to the calendar and note a few major things that jump out. Number one, CPI. What about those consumer price index numbers? Is inflation on the downswing, or are we seeing more numbers to the upside? That's going to be key into Wednesday's session. Of course, the beige book by the Federal Reserve. And as we push forward, we're going to see earnings by some major financial companies. So those will be the main things in focus, at least for now, as we start this week. Which stocks will be in play? Which stocks are going to be reporting earnings this week, at least in the S&P 100? And there are going to be a few of them, starting today with Pepsico. So just make a quick note about this, looking at Pepsi's earnings just after the bell here on Monday. So we'll put these in here. We'll take the extended hours and note a quick note about where those earnings are. Not much change, at least at the minute. So as we go forward, we're going to see earnings not just from Pepsi in today's session, but later in the week are financials. So we'll be focusing on financials later in the week, which continue the bear market, 20% decline. And for me, my terms, the downtrend, which is lower lows, lower highs. We have a good probability to go back to these lows. But CPI, Fed, anything that they might say this week, beige book, and of course what earnings are coming out. So again, PepsiCo, we'll start with that, which has a sell swing down from about 172 per share. But on Thursday, we'll have Morgan Stanley kicking off the financials, and that still continues its downtrend. Lower lows and lower highs make up a downtrend, and the opportunities are bear flags, or to sell short put spreads or vertical spreads, or just be bearish in general with shares or put options, and that's selling on the way down. Earnings will come from JP Morgan the same day. Then BlackRock will be Friday. Lots of financial companies report on Friday. So that'll be the focus going through the rest of the week. BlackRock, Bank of New York Mellon, Wells Fargo will be an earnings play. Citigroup, again, lots of happening in Citigroup, continuing the downtrend. US Bank Corp and United Healthcare, not a financial company, but will be reporting earnings. So those will be in focus along with the broader financials and the broader equity market. So these are things we're going to be watching. In today's session, we had a sell-off, and that was, for me at least, the dominant or the most probable outcome. Looking at the market, we continue these series of lower lows, and each little rally becomes a short to sell short, or a pop rally retracement to sell short. That would be a bear market rally. Right now on the SPX, that's about 3,900, and that was roughly the high in today's session. Seeing volume profile logic, just a quick intraday type play. We're seeing the market trade back into these profiles, or if you think about it from mean reversion, the mean or the midpoint, median in the middle, there's the middle. When the market is seen to be above it, that's going to favor the short side to trade back in. And when we see the market beneath the fair point or the midpoint fair valuation, that's about 3,825. That sets up little intraday or short-term long plays, only for intraday scalping and maybe some intraday or short-term swing trades. At the moment, those would be and continue to be contra trend, trend being down. But the bond market had its rally off of support. Back to the profile again, just looking at short-term plays in the bond market, and I'll quantify the bond market from TLT. Underneath the profile does favor a rally, and above the profile favors a sell. And it makes sense that if the bond market's going to strengthen, at least in today's session, that ought to correspond with an equity market that's down. So the bond market TLT, of course, ZN and ZB up about 1%, and the equity futures equity market itself down. In terms of the Nasdaq, the technology sector, and the Russell, down about 2% in today's session. So a bounce in bonds and a bounce in the equity, or a fall in the equity market. What about that dollar? That's something we don't talk about here in the videos that much, at least I don't. But it is playing to the upside, continuing in this uptrend for the US dollar. And again, the bond market on a midpoint and the yield That's what we'll be watching closely as we go through this week with financials and the beige book, anything else from the Fed, any other major headlines, and of course the earnings from those stocks will be this 3% level. Now in the TNX, the way it's priced, it says 30, but that's actually 3.0%, and that's a critical price point or reference level. We can see the same time the market traded into the 2% level and stalled, traded around it, and eventually launched above it. We are seeing consolidation at that 3% level in the 10-year Treasury note. Something very careful we're watching this week. So which stocks in today's session were the weakest? Again, financials and the XLF is in focus, but was there a sector that was most impacted in today's session? It was. And that was the discretionary right there with the technology. Which stocks make up that sector? Amazon and Tesla would be the consumer discretionary. That's going to be mainly right here, XLY. Tesla was off in today's session. We'll look at it this way. Was the weakest stock in the market, down almost 7%. That's Tesla shares. It's in the headlines again. But it wasn't just these two stocks with consumer discretionary, which extends well beyond that sector. It was technology in general. And these will extend, generally speaking, to the tech sector of the market. That's the XLK and that's the Nasdaq. They had the relative weakness. Other than that, it was a mixed bag. And the Dow actually was only a down 0.5% in today's session. So that's a way to look at the market from a sector standpoint. Utilities were the strongest, but see, that's not much of the market. Utilities themselves make up a very small sector or segment of the market. Right there with energy, and oil was down another 1% in today's session. So going forward, where are we looking at these leading stocks? They're weak. They're generally speaking technology names, and they're continuing their downtrends. So just quickly looking at our weakest stocks of the day: Tesla, Netflix, which is again getting a little weaker, Facebook changed its name to Meta, but it's still Facebook, which is having bear flags or additional sell side activity in the share prices. But General Motors, not something you might be seeing or concentrating on, but nonetheless is continuing to lead the market, or at least lead the stocks to the downside, and that's General Motors. Car company Nvidia is doing another sell side activities or bear flags on the way down. PayPal weak, almost at those lows, and we have our big consumer retail or discretionary into Amazon, which is selling down from its split adjusted 115, 116 per share. Behind that, speaking of split adjusted, we'll see Google do its split shortly, and it will be coming down from the 24,000 level as a consolidation, just a sideways box or rectangle, has occurred between 2,400 and about 2,100. We'll be watching that as the split adjusted shares come into being. That's similar to Tesla having its resistance into 760 and about 650 per share. The list goes on to some of the weaker names in today's session, but we'll focus on those technology names. Of course, XLK is the discretionary sector. If you just trade ETFs or options on ETFs, that's a bear opportunity as well, and consumer discretionary. So there's not a lot of difference in the sectors or individual stocks leading to these sector performance. And that will play right into the equity market as well. Gold, nothing to write home about where it's into support. And I think the bigger picture on gold is remaining the weekly chart. It's a big sell-off, but it just continues this long-term sideways trading range. Big box, big rectangle, think of it that way. From about the 1700 level, the midpoint is roughly just shy of 1900, right in this area. And the upper bound, crudely drawn box, but still, roughly 2050 per ounce for the gold contract. And that is again into a support level in a longer term trading range. Crude is coming off. That's that deflationary play we are expecting and hoping on, that inflation is on the downswing. We saw later in the last week's video about other commodities. We'll be watching crude very closely for additional sell side activity. Lots on the calendar this week, but particularly in the CPI data, additional stocks that have earnings, and the financials coming up at the latter part of this week. As always, be careful and safe. This is Corey Rosen with tonight's Theo video update for July 11th, 2022.